Hello everyone and welcome to this weekly technical analysis video here at xm.com. So starting from the US, the March reading on consumer prices is due out on Wednesday, and later in the day the FOMC minutes of the latest report at which they raised rates by 25 basis points but indicated that further increases may be necessary in their forward guidance. So the year-on-year CPI data is predicted to ease to 5.2% from 6% before. So looking at dollar again, we can see that the price is struggling to remain above the 132 psychological number and the 20-day SMA. And if the price moves lower, it may hit again this short-term uptrend line around 131.30 support. Even lower the price, it may move towards the 29.18 barrier, and it may change the outlook to bearish, meeting the 128 psychological mark. On the flip side now, if the price overcomes the 33.6% Fibonacci retracement level of this downline here, then it may move towards the 50-day SMA, which overlaps with the 133.70 resistance, and even higher the 38.2% Fibo of 136.66, and of course the 200-day SMA around 137.23, which was acted as strong resistors in the past. Looking now at the technical oscillators, the RSI is flattening near the 50 level, while the MACD is holding above its trigger and below its zero line. So moving next, the most measures of inflation in Canada slowed more than expected in February, which confirmed the bank's view and led investors to give a 15% chance of a rate cut as soon as this week's meeting, and an 80% chance of doing nothing. This means that if officials decide not to change the interest rates, the market may react to hints and signs about what the bank will do next. The loonie may be further weakened if investors believe rate cuts are coming. So looking at dollar CAD, we can see that the price rebounded of the 1.34 round number and the 200-day SMA, but is now moving slightly lower, erasing the gains that posted in the preceding 4 days. So if the market moves beneath this uptrend line here, then it needs to penetrate this psychological mark here before moving towards the 1.32.25 to 1.3260 support region, shifting the outlook to bearish. On the flip side now, if the price overcomes the 50-day SMA around 1.3574 and the 20-day SMA around 1.3605, it may move towards this insane swinging lows here of 1.3640 ahead of the 1.38 round number. Now the RSI is pointing slightly down in the negative region, while the MACD is flattening beneath its trigger and zero lines. So moving next, the Australian job report for March is due out on Thursday, but investors will also be looking at the Chinese CPI and PPI data, which come out on Tuesday. Since China is Australia's biggest trading partner, both data will probably affect Aussie dollar. So the unemployment rate in Australia is predicted to rise slightly up to 3.6% versus 3.5% before. So looking at Aussie dollar, we can see that the price is holding within this upward sloping channel since the beginning of March, and is now challenging the lower boundary of the channel and near the 0.6625 support level. So any movements beneath this line here, it may switch the outlook to bearish, meeting the 0.6560 and even lower the 0.6385 support. On the other hand, now if the price overcomes the 200-day SMA, then it may move towards the 50-day SMA around 0.6750 ahead of the previous peak of 0.6790 and 0.6857. The RSI and the MACD are also endorsing a slightly positive momentum. The MACD is standing above its trigger line near the zero level, while the RSI is pointing slightly up beneath its neutral threshold of 50. So that's all from me. Thank you for watching and have a great day.